Hi, this is Noras Hafiz, and in this series, we continue talking about the global financial markets. Today, we're going to talk about the factors affecting stock markets. Factors affecting equity markets are those that have a direct impact on corporate net profits. The beginning is from international factors such as wars, economic sanctions, customs duties, and quotas, all of which negatively affect corporate profits. As happened in the trade war between China and the United States of America, the imposition of customs duties on a company's products means an increase in its price and a decline in its competitiveness in the market, and thus it will be affected by a decline in its revenues. Also, regulatory conditions can reduce corporate profits. It also happened with the imposition of stricter measures by the US regulators imposed on the Chinese companies listed on the US financial markets, or those measures that China imposed on Chinese companies to protect customer data from reaching the Americans. All these rules have plunged the stocks of Chinese companies in recent years. For example, Alibaba share price fell from 319 US dollars in October 2020 to 57 US dollars in October 2022. Another factor is the state's fiscal policies, such as increasing taxes on corporate profits, are also considered a negative factor, while reducing taxes is a positive one. This was obvious when Trump administration slashed taxes on corporations, which pushed stocks to a strong gain. Another factor is monetary policy by the central bank, which is an important in terms of ability to stimulate spending when interest rates lowered, and thus raise corporate profitability and the value of stock market. While a significant increase in the interest rate may enter the economy into a severe recession and is therefore sometimes considered a negative factor, as it reduces the pace of spending compared to the previous period. The internal factor is company's ability to increase its customers to enhance its profits, and it's important to evaluate its future projects as considered decisive in raising the stock price due to the expectations of greater cash flows in the future. It's important to estimate the cost incurred by the company for these projects. For example, despite the promising metaverse projects by Meta Platforms, which was called Facebook, the costs of establishing the project are very high and decreasing its net profit. Facebook was also negatively affected by restrictions imposed by Apple that limited Facebook's ability to track user data. Therefore, Meta share fell from 384 US dollars in September 2021 to 87 US dollars in November 2022. Netflix share price also declined due to competition from other companies that led to a decline in the number of net subscribers. The share price fell from near 700 US dollars in November 2021 to 161 US dollars in May 2022. On the contrary, Tesla has shifted in recent years from net loss to net profit, which pushed the stock to significant highs. In general, in the stock market, the rise in production costs plays an important role in declining stock markets, as happened in 2022 with the rise in commodity prices. This was accompanied by a decline in the purchasing power of individuals, which reduced the revenues of many companies and affected their profitability. But mining and energy companies benefited from the high prices of these commodities as they achieved very large profits. For example, ExxonMobil benefited and achieved its highest net profit, close to 20 billion US dollars in the third quarter of 2022, and its share hit a new high. At the end, we conclude that there are many factors that must be included to choose the shares to be invested in.